Hi, I'm Kanisha Schuster. I'm the Associate Commissioner of Government Relations here at TDI. Thank you so much for joining me for this InsureEd. I'll be leading the presentation, and then during our Q&A portion, we'll have Robert Simons. He's in the Office of Policy Development Counsel, and he'll help us with a lot of legal questions and life and health questions you might have. We'll also have Marianne Baker, who is the director of our property and casualty lines here at TDI. So a little bit about TDI. We regulate the business of insurance in Texas, meaning we regulate more than 3,400 companies and over 944,000 insurance agents and adjusters. TDI also regulates life insurance and fully insured health insurance plans. We regulate property and casualty insurance products, amusement rides, as well as housing, the State Fire Marshal's Office, and the Division of Workers' Compensation. We're going to talk about the legislative session, and each regular Texas legislative session begins in January of odd-numbered years. We only have a legislative session every other year. It lasts for 140 days, and bills that pass out of both chambers go to the governor for his signature. In addition to regular legislative sessions, the governor can also call special sessions that last up to 30 days. At the end of the legislative session, the governor has an additional 20 days to sign a bill, veto a bill, or let it become law without his signature. And during the legislative session, we have committees of jurisdiction where most insurance-related bills are heard. In the Senate, they're most often referred to the Senate Business and Commerce Committee for property and casualty legislation. And for life and health insurance, those bills mostly were referred to Health and Human Services Committee. In the House side, all insurance bills tended to go to the House Insurance Committee. And bills dealing with the Fire Marshal's Office could end up elsewhere, but generally TDI was dealing with the same committees of jurisdiction and members of each committee during the 89th session. So we'll talk a little bit about what happened in this most recent 89th regular legislative session. The Sunset Advisory Commission is a body tasked with identifying and eliminating waste, duplication, and inefficiency for more than 131 Texas state agencies. Agencies are generally slated to go through a sunset review every 12 years, but the legislature often moves those dates around based on need and efficiency. House Bill 12 from the 89th session updates public notice requirements around sunset review, adds a sunset requirement for agencies to improve performance measures that are included in the Appropriations Act, and it also adds an interim audit by the state auditor's office to review efficiency prior to a full sunset review. TDI is scheduled for the 28-29 sunset review cycle, so it will go an SAO audit in fiscal year 26 or 27. It's a new process, so we don't know the full extent of these audits until they're conducted. By statute, TDI must submit a report with legislative recommendations every odd-numbered year. Our 2024 biennial report had 3 recommendations to help consumers and meet TDI's mission. Our first recommendation was to require all companies to tell consumers why they declined a policy application or why an existing policy was canceled or non-renewed. This aligns disclosures across policies and increases transparency and consumer knowledge. Previously, consumers could ask why a policy was declined, canceled, or not renewed, but many of them were not aware that they could ask. If they knew the reasons, there might be an option to fix an issue or to search for other coverage. So House Bill 2067 was carried by Representative Dennis Paul and Senator Mays Middleton. It also adds reporting so that insurers give reasons to applicants, but they also report reasons to TDI, and TDI will post a summary report of the reasons given to consumers. And we plan to adopt rules to implement this legislation. Next, we recommended aligning the state fire marshal's office investigator salaries with other licensed peace officers. SFMO investigators are licensed peace officers, but were compensated at a lower classification than other commissioned law enforcement positions. Investigators are performing duties like other officers in other state agencies without being compensated at the same level. Additionally, TDI has another commissioned police officer unit in the department, the fraud unit investigators, who were also compensated differently than the SFMO investigators. So this change aligns SFMO law enforcement with other occupational categories for law enforcement duties. This bill was carried by Representative Gary Van Dever, who had filed similar legislation on his own in the last legislative session. Our last recommendation was filed by Senator Lois Kolkhorst and Representative Salman Bojani. It gives the fraud unit the same legal authority to review electronic data as similar state agencies with licensed peace officers. Most fraud unit investigations involve electronic communications, and without access to that consumer data, investigators were having to rely on other agencies to help with those investigations. This bill doesn't change any law that requires a grand jury subpoena, court order, or search warrant for any data. It just updates the code to allow the fraud unit to directly pursue those. Next, we will talk about some of the main property and casualty related bills from the 89th legislative session. Here's a quick overview of the legislation we'll touch on. First, we'll touch on a package of Texas Windstorm Insurance Association bills, also known as TWIA. TWIA was established by the legislature in 1971 in response to regional market conditions following Hurricane Celia in August 1970. Insurers were pulling out of these 14 coastal counties that you can see on the screen. So TWIA is an insurer of last resort and provides wind and hail insurance to the Texas coast. House Bill 2517 exempts TWIA and the FAIR Plan from premium and maintenance taxes. The FAIR Plan is the insurer of last resort for Texans in all part of the state who can't find coverage elsewhere. It covers all perils, except that it does not cover wind and hail in the TWIA coverage area, so as not to compete with TWIA. These entities often operate similar to other insurers, but do have differences by law, such as eligibility for that coverage. House Bill 2517 is aimed at saving money for these insurers of last resort, meaning they will not pay premium and maintenance taxes. Premium taxes are paid to the state, while maintenance taxes generally cover the cost of TDI regulation. Next is House Bill 2518, which bans third-party TWIA payment plans. Premium financing with a third-party company used to be fairly popular for TWIA policyholders because statute required all premium to be paid upfront. But now that TWIA has installment options, House Bill 2518 prohibits the use of third-party companies, which avoids those consumers paying fees that they don't need to pay under a TWIA installment plan. House Bill 2213 updated TWIA board eligibility requirements. There are 3 categories of board members on the TWIA board: insurance industry representatives, coastal representatives in the TWIA area, and representatives for stakeholders outside the TWIA area. So, insurance industry board members are now required to live in Texas, which wasn't a requirement previously. Previously, 1 coastal board member needed to be an agent. That statute is updated to say that at least 1 member may be an agent, and that agent must be actively offering or selling wind and hail policies. Also, previously, the representatives for stakeholders outside the TWIA area had to be more than 100 miles from the Texas coastline. They've removed that requirement, so anyone outside the catastrophe area or TWIA coverage area is eligible for those positions. And a major change for TWIA this legislative session is a change to their funding structure. House Bill 3689 replaces public security layers with a state-financed investment of up to $1 billion, which is repaid by surcharges on certain lines of property and casualty policies statewide. This chart demonstrates the current funding structure for TWIA. Because TWIA is an insurer of last resort, its funding also differs from other insurers and is set by statute. The main change from House Bill 3689 is that it replaces public security layers with that state-financed investment. The bill maintains TWIA's CRTF as the first source of funding for catastrophic losses, and it groups member assessments into 1 layer of up to $1 billion, followed by reinsurance. Another change with 3689 is that TWIA was previously required to maintain funding to cover up to a 1 in 100 year storm. That meant calculating the cost of a 1 in 100 year storm, that is, a storm with about a 1% chance of happening in any year, and buying reinsurance to cover the gap between the top layer of funding and the estimated cost of that 1 in 100 year storm. TWIA was spending a large portion of premium on those reinsurance costs, so House Bill 3689 changed that requirement to a 1 in 50 year storm, which will bring down those costs for the association. Next, we'll move into the rest of our property and casualty legislation, starting with Senate Bill 213, which bans mandatory bundling or tying. Tying is a practice where a company or agent would require a consumer to buy one kind of policy in order to sell them another. So, for example, a company might require someone to buy an auto policy in order to sell or renew them a home policy. TDI had heard this practice was popping up in the market and had begun rulemaking to clarify a prohibition on mandatory bundling. But Senator West pre-filed Senate Bill 213 before the legislative session began and became law, so TDI deferred to that legislation. Another big bill in property and casualty was Senate Bill 458, which establishes the right to home and auto appraisal. It's an example of legislation that took multiple sessions to cross the finish line, and it requires that home and auto policies include the right to appraisal, which is a process to resolve disputes over the amount of coverage. TDI mentioned this issue in its 2022 biennial report, and OPIC included the issue in its last two biennial recommendations. TDI must adopt rules necessary to implement the bill, including establishing a period in which appraisal must be completed, and the rules will consider appraiser and umpire qualifications. We'll plan to do an informal rule to maximize stakeholder feedback. House Bill 3388 deals with group property and casualty products. So group products in the commercial lines were already authorized, and House Bill 3388 updates disclosure requirements for those group commercial policies. It requires insurers to give each member a copy of the policy and the certificate of insurance. It allows incidental casualty coverage in a property policy. And it allows surplus lines insurers to write those commercial group property requirements under surplus lines requirements, and limits some reporting to the stamping office for those commercial group property policies. It also allows personal lines group policies for groups of 10 or more. For personal policies, it must create an economy of scale and have benefits reasonable to the premium, and there cannot be a shared aggregate limit. So each individual personal property under this group umbrella has its own limit. The group does not have a dollar limit for a claim. These property policies can be issued by an admitted market insurer or a surplus lines insurer. And policies are subject to rate and form filing requirements. And it includes some other consumer protections for this new type of group insurance product in the personal lines space. This will be effective on 9/1, and we don't plan to adopt rules at this time. Senate Bill 1644 was also a recommendation by OPIC, and OPIC found that some companies that included credit as a factor for rating individuals would sometimes rate a policyholder only at initial issuance. So this requires that companies update all credit scores rather than letting them get stagnant. And last on our list for property and casualty bills is House Bill 2563, which creates a prescribed burn self-insurance pool. Burn managers in Texas were having issues getting the insurance required by the Natural Resources Code, and TDI had discussions with the Department of Agriculture and burn managers, noting the lack of coverage that was available. This bill provides a backstop program to ensure that the lack of insurance capacity in the admitted market for this type of activity didn't impede the ability to conduct prescribed burns. This will be administered by the A&M Forest Service, and it requires the Forest Service to collect data from participating prescribed burn managers, which will be used to adjust the amount of premium for the self-insurance coverage. Now we will touch on highlights of life and health related bills in the 89th session. So we've got a little preview of what is coming. And we'll start with a group of bills dealing with balance billing and independent dispute resolution. In the 88th session, Senate Bill 2476 authorized political subdivisions to submit ambulance rates to TDI and created a minimum payment standard for out-of-network emergency ambulance services rather than using an independent dispute resolution process that is used for other medical claims that are protected from balance billing. That bill was set to expire, so Senate Bill 916 extended the effective date of that legislation to 2027, and it also allows subdivisions to annually adjust their submitted rates rather than an automatic annual adjustment by health plans. So Senate Bill 916 continues to protect Texans from balance bills for ambulance. Next is Senate Bill 1409, which allows post-secondary educational institutions to offer health benefit plans to students enrolled in the institution and their family members. Universities are already allowed to offer fully insured products to students, but Senate Bill 1409 will allow a plan that operates more like a self-funded plan that is more often offered to employees. These plans will not be regulated by TDI because they are not considered insurance by statute, but it does require that these plans register with TDI and protect those enrollees from balance billing, the same way that fully insured plans protect consumers from balance billing. So TDI will update rules to include these plans and provide a process for them to register. Next is Senate Bill 2544. So Senate Bill 1264 created the balance billing IDR program, and claims that are subject to balance billing protections go through IDR, but there are two paths. Provider disputes go through arbitration, and those must be submitted 90 days after initial payment. Disputes from facilities were carved into a section of statute dealing with mediation that existed prior, and this mediation statute did not include a deadline to submit eligible disputes. Senate Bill 2544 creates a 180-day deadline to submit balance billing disputes to the Texas portal for facilities, and it also creates a deadline for any lingering claims from the initial effective date of Senate Bill 1264, which is 120 days after the effective date of the bill. That is going to be October 20th. TDI will adopt rules to implement this legislation. Another big topic in the health insurance space is utilization review. Because utilization review can determine coverage, there are a lot of guardrails to protect consumers. Senate Bill 815 addresses the use of AI in utilization review. It restricts the use of automated decision systems for utilization review and provides an exemption for administrative or fraud detection functions. So any basic functions in utilization review can use AI, but any automated decision system to make a decision on coverage is restricted. In addition, it expands disclosures to anyone receiving an adverse determination if AI was used. It also allows TDI to audit or inspect those processes at any time. Next is House Bill 3812. Under the utilization review umbrella is prior authorization. And a couple of sessions ago, the legislature created a gold carding system, which would exempt providers from prior authorization for things they were generally approved for. That program didn't have the impact that the legislature had hoped, so House Bill 3812 by Dr. Bonin seeks to broaden that impact. It expands the claims evaluated by extending the review period and by requiring evaluation to consider pre-authorization requests from a particular physician or provider for any plan issued or administered by the insurer or its affiliates. That means that prior authorizations for non-TDI regulated plans, such as Medicaid, CHIP, Medicare Advantage, and ERISA self-funded plans, must be included in the evaluation, even though the exemption does not extend to those plans. It creates an appeal process for initial denials of a gold card exemption and creates reporting for gold carding programs and plans. We'll adopt rules to implement this legislation. House Bill 138 directs the Center for Healthcare Data at the UT Health Science Center at Houston to create the Health Impact Cost and Coverage Analysis Program. And the UT Health Science Center also houses the All Payer Claims database. The bill requires the program to conduct an analysis of legislation that would impose a new mandate on health plans using claims data and other scientific and academic resources upon request from legislative leadership. TDI will report health benefit plan covered lives, and the controller will work to assess health plans and report data. House Bill 2516 creates coverage for people under 65 on Medicare with ALS or end-stage renal disease. These populations can already get Medicare, but their costs are much higher than for seniors. So House Bill 2516 requires plans to offer the same coverage to those individuals under 65, and plans A, B, and D must be offered at the same rate to those who are 65 or over. Other plans can't exceed 200% of the premium for those 65 and older. TDI issued a bulletin to guide industry and will also adopt rules. House Bill 3211 expands vision benefit network participation. It requires vision care plans to include a method for licensed optometrists or therapeutic optometrists to submit an application to contract with the plan. It does not allow vision plans to exclude providers from contracting due to the number of providers already contracted or provider time, distance, and availability. It also adds deadlines for credentialing and finalizing those contracts, and it is effective immediately. We'll adopt rules to align. Senate Bill 896 extends health plan enrollment periods for newborns to 60 days. Previously, these enrollment periods were 31 days, and extending them to 60 days will align with the special enrollment period under federal law. So this is a cleanup to align state and federal policies. We'll adopt rules to ensure that alignment in rule. Senate Bill 926 allows a health plan to steer enrollees to certain physicians and providers using incentives or tiered networks. But any steering must be subject to a fiduciary duty only for the primary benefit of the enrollee or contract holder. So provider ranking was already allowed in statute, but Senate Bill 926 clarifies the guardrails around provider ranking and allows tiering and steering so long as the enrollee is the primary beneficiary of those arrangements. We'll be adopting rules, so keep an eye out for those. House Bill 2254 deals with the use of value-based models, which have become more popular in recent years. It authorizes PPOs and EPOs to use value-based and capitated payment arrangements when contracting directly with primary care physicians or primary care physician groups. It doesn't allow global capitation arrangements. House Bill 2254 also includes protections for physicians from coercion against joining any of these models. House Bill 2221 updates rebating guidelines for life and health insurers. It adds provisions to allow loss control or value-added services to policies. There was similar legislation on the property and casualty side last session, which allows companies to offer services that may reduce claims and be assured that that is not considered to be an unlawful rebate. It does continue to prohibit unlawful rebates and inducement and any discrimination. We'll also adopt rules on House Bill 2221. Next, we'll touch on bills dealing with the State Fire Marshal's Office. We've got two main bills to touch on for the State Fire Marshal. The first is House Bill 3824, which establishes battery energy storage system requirements. TDI will adopt fire safety standards and testing requirements for design, installation, operation, and safety of these battery energy storage requirement systems. Any facility owners or operators must meet established standards and requirements before applying for a permit or any authorization for one of these systems. It also requires a fire safety inspection at least every 5 years. We'll adopt rules to implement House Bill 3824. House Bill 1899 is a simple bill that lowers the age to get a fireworks license. Previously, applicants needed to be 21 to get a fireworks license. Now, anyone 18 and up can apply for a fireworks display permit and pyrotechnic license. So we will also update rules on firework licenses. I'll touch just a little bit on special session. The first called session after the 89th regular session was July 21st to August 15th. It included 18 agenda items, including flood preparation and recovery after the July 4th floods in Texas, property tax cut, title theft and deed fraud, hemp regulation, and redistricting. That session ended on August 15th, but the second called session began on August 15th and included 19 agenda items, including camp safety, redistricting, and many holdovers from the first called session. That session ended on September 3rd. And we didn't see any movement or hearing of insurance-related legislation during either of these called sessions. Thank you so much for joining me, and now we'll move on to the Q&A portion of our webinar.
All right, welcome back to the Q&A portion of the webinar. Joining us to answer your questions, we have Kenesha Schuster. We also have Marianne Baker. Marianne's the director of the Property and Casualty Lines team in our Property and Casualty division. And we have Bob Simons. Bob is the director of the Office of Policy Development Counsel in our General Counsel division. All right, just a couple ground rules before we get started. We're not going to answer any questions about a particular company or situation you're having. You can email questions to governmentrelations@tdi.texas.gov. We'll also put the email in the chat, and I'll say it again before we leave. Okay, to ask a question, go to the Q&A button at the bottom of your Zoom window, and we'll try to answer as many questions as we can. If we don't get to your question today, you can email us, and we'll try to get you an answer. All right, we saw a lot of questions about rural ETAs. Since we have close to 30 legislative rules alone, we probably won't have time to give you specific dates on each one. But be sure to go to our website. At the bottom of the screen, you'll see an update pop-up box. Go to that box and you can sign up for updates, and we'll let you know about those. All right, panelists, let's get started with some questions. All right, are approvals okay utilizing AI? We understand that adverse determinations aren't allowed.
Yeah, I can take this one. I think that's related to SB 815. And I think just actually this morning, I was looking at our rule proposal for the gold carding rule, which partially touches on SB 815. I don't recall any specific guidance about that, but I'm thinking back to the statute, and I'm fairly certain it talks about adverse determinations. And so I think that's your answer. Is it an adverse determination? So just look at the statute. I think you're probably on the right track there.
Okay, great. All right. Are you expecting HB 2067 to happen through TECO-REP?
So I know lots of caveats. We are still in active development in all three phases of HB 2067. The proposals and the first proposal we hope to get you very, very soon. It is well along its way. So we hope that we are able to share it with the public pretty shortly here in the next few weeks. I believe I can allow to say this. It does deal significantly with statistical plans. So I think you're talking about TECO statistical plans. So that is the primary means, I think, that we are developing rules along to implement HB 2067. You will have lots of opportunity, however, once that hits the website, once that hits the text register, we're going to have, of course, the standard 30-day comment period, and I am 99% sure we will actually have a rule hearing here, so plenty of time to provide additional feedback. And I think I would be remiss if I didn't say we have all the various phases, addressing all the kind of general topics that HB 2067, we always reserve the right to do more rulemaking, right? So if we actually need to reopen rules to provide more clarification or guidance about specific things that we didn't touch in the initial 3 phases, at least, of rulemaking, we may get back to that. And so anytime we cull from comments, we cull from forums like this and emails and any kind of stakeholder feedback in case we need to open up a rule and address something in particular. But stay tuned for those rules. They should be coming very, very soon. At the very least, the dwelling residential piece is on the precipice. I think it's coming very, very shortly in the next 2 phases. We are not waiting for that phase to be adopted before we start the next phase. All 3 phases are in active development, so we are working on all of them.
Okay, great. Thank you. All right. Is there any information about new regulations for notaries needing CE hours to maintain their commission?
So I'll take that one. I saw a couple of questions about notaries. So I just wanted to make sure everyone here is aware, TDI doesn't regulate notaries. So we regulate the business of insurance. I think there was legislation on notaries this session, but TDI was tracking about 900 pieces of legislation, but not related to notaries because we are not their regulator.
Okay, great. Thank you. All right. Any updates on the status of SB 1188? It requires several agencies to coordinate efforts to update requirements for electronic health records.
Yes, so SB 1188 requires an MOU between multiple state agencies. TDI isn't the lead on that, as again, we're also not the regulator for electronic health records. So I don't have an ETA on an MOU, but the bill does require an MOU.
Okay. All right. Is there a plan to have a rural hearing on the SB 458 proposed rules following public comment?
I know that we are, already receiving some comments on the informal, and the proposal is starting to be written. I'm not sure if our draft currently has a hearing. I wouldn't be surprised if it does, though. And I say that because any member of the public has the opportunity to request a hearing, and we almost always grant those requests. And just purely from a bureaucrat perspective, it's far easier if we bake in the hearing and the notice and get the room dedicated and have everything set up and give people many, many weeks, 2, 3, 4 weeks to have opportunity to arrange travel and come over to Barbara Jordan or wherever we end up having that hearing. So I can't guarantee you we are going to have a hearing, but it is probably a good bet that if we are doing an informal rulemaking on a bill, it's because we know that there's a lot of feedback out there from the public, which probably means we're going to have a hearing. So I would say pretty good bet we're going to have a hearing on that one.
And for anyone who's not already aware, there is an informal proposal out on SB 458 appraisal. So if you visit TDI's website on our rules page, you'll see it there.
Okay, great. All right. How do you think the unbundling of auto and home may affect the premium as priced by the carrier?
So, Marianne, would you like to take that one?
I'm happy to take that one. The premium will depend on each specific insurer and what rating plan they've filed. All insurers have their own plans, and they vary depending on the specific factors and expenses and claims that insurer experiences. However, it's important to know that bundling isn't prohibited if the consumer chooses that.
Yeah.
It simply prevents the bill prevents the company from imposing that on consumers. So they can still offer discounts for bundling, and that will allow consumers to still get a good rate if they put both of their policies with the same company.
Okay,
Yeah,
great.
thank you for that clarification.
Okay. All right. Can you please provide details in regard to gold carding reporting, the template to use, and the frequency? Will it need to be delivered through SURF?
Oh, I don't know if I can answer the SURF question, but I do know we have a gold carding rule package. It's quite extensive. There are a lot of tweaks from, I guess it was 4 years ago, right? The original gold carding rules. So it's an extensive series of amendments that update a lot of the timeframes and a lot of the sample size requirements that came out of our experience over the last, 3.5 years of gold carding. So I do expect that proposal to see the light of day before the end of the year. hoping October, November timeframe. Sometimes the timeframes are a little bit out of our hand, but I know that it is an active development. And I say this because as director of PDC, I have to review it this week, actually. So the sooner once this ends, that's my next task. So we will be looking at that. Absolutely.
Okay. All right. About HB 2067, will there be specific guidelines given for what constitutes a source of information for non-renewals, cancellations, or declinations?
I don't want to spoil too much in terms of peeking under the hood of how it's going to work. It's going to involve, at least as drafted, and again, this can change based on comments, and maybe we'll reopen the rules and provide, additional guidance. There will be a number of codes. We work with our actuarial staff and our property and casualty line staff to come up with pretty long list of cancellation reasons in terms of and so some of them are maybe broader and some of them are narrower. I don't know if any address the source. I guess some of them source, what particular reason. But that is, both the structure, of course, anything is fair game in a rule proposal, but if you think of if there are some categories that are too difficult to discern from reporting, I think that would be an excellent comment we would love to hear. If there are some categories that we are not asking, that would be an excellent comment. We'd love to receive that kind of thing. So that I know is the real meat and potatoes of that phase 1 of 2067 is kind of the reason codes and how that's going to be reported, and then later and also communicated to the would-be policyholder, the policyholder. And so that's very, very important. And we know that we anticipate receiving a lot of guidance related to that, a lot of feedback.
Okay. Is TDI expected to adopt rules or provide additional guidance on HB 3689?
Yes, we will. We will have rules on HB 3689.
Okay.
All of the funding structure is in statute, and so parts of 3689 are self-implementing. Parts of it will be implemented by TWIA and the Controller's Office, and parts of it will be adopted and ruled by TDI.
Okay. All right. About SB 896, it was said TDI will adopt rules to implement, but the Senate bill says this change applies to policies issued on or after January 1st, 2026. If the ACA forms were already filed and approved, do these need to be amended to update prior to January 1st?
So I think this is an example of where much of the statute is self-implementing. So the statute says, what is expected, and TDI will align our rules with the statute.
I think the rules currently say 60 or 61 days, and that's going down to 30 or 31. Statute trumps rules. We will try to get our rules updated as possible to be consistent with the statute, but follow the statute. Absolutely. Thank you.
Okay. Now this next one says, Bob, thanks for the comment about the codes for cancellation, but what about declinations? That universe is potentially broader.
Again, there's no one here to kick me under the table. There are codes for cancellations and codes for declinations and non-renewals. A finite number of codes. We want discrete categories. I think that will aid reporting, but that's certainly the kind of thing we'd love to receive additional feedback on.
Okay. All right. What if someone believes one of these laws isn't being followed? How can they report that?
If you go to the TDI webpage, you can find a link to submit a complaint. We welcome those.
Great. Okay. Can we expect to see a proposal for the right to home and auto appraisal?
Yes. As we mentioned earlier, the informal proposal is out and on the TDI rules page now.
Yes, and the comment period for that is open. So I think until October 6th at 5 o'clock. So take a look at it. There's the actual kind of a draft of rule text, and so now is an excellent opportunity to provide feedback on that.
Okay. And can consumers still bundle home and auto policies?
Marianne?
Well, yes, they can. If a consumer chooses to bundle their home and auto policy at one company, they're free to do that. And companies are free to offer that to consumers. They simply cannot compel consumers to have both their home and auto at one company.
Okay, got it. All right. How many days can a carrier oh, sorry. How many days can the carrier provide the consumer to denial or coverage upon newer or renewal submission? Is the process for consumer complaint to TDI, or how is the process?
I think stay tuned for the rule
Okay.
on that.
Okay. Does the reporting aspect of HB 2067 apply to all lines, including life?
Marianne? I believe that applies to.
I think it's the whole world of property and casualty.
Right.
So that's why it's broken up in phases, but I don't think it is life and health.
I don't think so either. No, it's property and casualty lines.
Okay. I noticed that some of the bill summaries didn't include TDI will implement rules with respect to implementation. So for those where that implementation action was not specified, does that mean rules will not be adopted, at least right now?
Generally, yes. We tried to note where we know we're going to adopt rules. Like Bob said earlier, we kind of reserve the right to adopt rules if things are unclear, if we get complaints. But a lot of legislation is kind of self-implementing.
And a little peek behind the curtain here is as session is wrapping up, we are identifying every bill that we are pretty sure is going to require rulemaking and rule implementation on our part. But I would also say every biennium, there's a couple bills that maybe sneak past our initial radar and then we end up picking up. So we are always kind of surveying, looking at consumer complaint information, looking at what's out there and seeing if we need to do implementation. And I feel like every single session, my plan is to identify 100% of the bills that require rulemaking, and there's always a couple that sneak under the tent.
Okay, great. Well, it looks like we're out of questions, so we're going to wrap it up here. If you think of a question that you didn't submit today, you can always email it to us at governmentrelations@tdi.texas.gov. And after we're done, you're going to get a short survey, so let us know how we did. We'll also send you a follow-up email in a few days with a recording of today's slides that you can share with your coworkers. All right, we'll also include some resources or links that might be useful. That's it for today. Thanks for joining us. Have a great rest of your day, and I'll see you at the next InsureEd webinar.